John said, local council accounting from zero to hero. So really the idea from today is it's a bit of an introduction, kind of if you're maybe new to the sector, you're a little bit lacking in confidence, as some of you were when you answered the poll earlier. Maybe, you know, numbers isn't your happy place, as the role of the clerk is so broad, but there's quite an element of sort of the importance of numbers within that. So it's just kind of thinking about, why is it important? How can you sort of make that process a little bit easier? And then at the end of the session, we'll talk about year end as well, because we're sort of still in the thick of it for many of you, probably still working on that. So firstly then, just as sort of an introduction to really think about, what is a sort of local town parish council, and what does that actually mean in terms of sort of the financial responsibilities and considerations? So I've defined a parish town council as an elected body at the first level of local government, makes decisions on behalf of the parish, and has a wide range of powers relating to local matters. So that obviously has financial considerations related to that, and some of those considerations I've listed at the bottom. So firstly, transparency. Obviously, if you're smaller, you're going to have the transparency code that you're going to be bound by anyway, but generally, in sort of general terms, obviously we're providing services to your area using public funding in terms of the precept. So if you're taking the money from your local residents to spend on things within that area, there needs to be a level of transparency. What are we using it for? How have you worked out the figure, you know, the precept that we need to take? The efficient provisions of services. So those services that you're providing need to be efficient, not necessarily the cheapest, but they need to be efficient. And obviously within your kind of standing orders and the controls and the procedures you have, you'll have ways that you award contracts and making sure those things are done appropriately. You've got the setting of the precept. So obviously that's key, because you're going to be taking that money to enable those services. And actually we do a whole session on budgeting, forecasting, setting the precept in that kind of time at the sort of back end of the summer into September, October. And actually we've had people coming on and said actually their councillors feel it's a good thing not to put the precept up. And actually when we think about that, if costs are going up and you have services to provide, is it the best thing not to raise the precept and actually not keep in line with inflation and the things you need to do? So it might not be always, you know, we haven't raised the precept, that's great, but actually setting it appropriately. So we've got enough money to do what we need to do, but equally we're not taking more than we need and ending up with, you know, large amounts in the bank that don't have a specific purpose. Obviously, if you do, you've got your reserves and you're managing them appropriately. So you have your general reserve to manage the cash flow and the running of the council if anything unexpected happens, but you're also likely to have other reserves, sort of ongoing projects, specific things you want to do, and the way you manage them. So all those things there related to that obviously require good financial information. It's so important to keep good financial records in order that when you think about these things, you can provide timely and accurate information to allow all those things to take place. And that's kind of the mindset we need to be in. Actually, we need to keep really good records in order for us to do these things. Okay. And that then relates to you and your role. So every local authority is required to appoint an officer to be responsible for the administration of their council's financial affairs. So the responsible financial officer, the RFO. If you're a small council, a lot of the time you'll be the clerk and you'll be the RFO. That then has kind of a conflict in itself, because obviously a lot of the time, as we said, time is of the essence, and sometimes time you might be part-time, and then there's such a broad range of jobs and tasks to do within the clerk, then you've got to make that time for the financial elements as well. So thinking about the responsibilities of the RFO then, firstly, we've got following proper financial procedures, having internal control and audit systems. So this is all in relation to how things are done in the most appropriate way, following your standing orders, doing things correctly. And this will be tying in with all those things part of the AGAR. So those first two sections with regards to your internal auditor coming to check some of those things, and the annual governance statement, making those assertions that those things are happening. So obviously they're key to make sure things are done properly, okay? But also in terms of your reporting. So if you have your monthly council meetings, taking information to them so that they have good, accurate financial information on spending, the current position, and then they can make informed decisions. So this is things like the bank reconciliation, the accounts balanced to the bank rec, therefore, they're like accurate there. We've got budgets versus actuals. Where is the spending going? Have we got any potential issues here? Do we need to take corrective action? Do we make sort of decisions about what we can then spend on in the future? And then obviously as well, complete the AGAR for the year end as well. So that's obviously a really big element of that again. And at the start of the year, we do lots of sessions on that and sort of, again, time management and making sure that you've got all the information in order to do that. And again, all this comes back to good financial information and sort of accurate and timely recording of it, so you've got all that information to refer to. Thinking about actually what you're recording and how you do that, I've also put in a bit here about which accounting approach. So receipts and payments or income and expenditure. Now hopefully you're all used to those terms, but we do have people who come to us at Scribe, they join the Scribe, we'll ask the question, which approach do you use? And either they're not sure, they might know what to do, but maybe they're not sure of the terminology, or they're confidently answer us with one of them and actually it turns out they're doing the other one. And it's just understanding what did it mean, because the way in which you complete your AGAR will be different according to which approach you use. So again, it's important just to understand that. So receipts and payments, a simple form of accounts in that they're simply recorded at the time at which they're received. So very simply, what happened, when it happened, regardless of when it relates to. So I made a payment today, this was who it's to, what it's for. It doesn't matter when the invoice was from because it happened today. Okay, so fairly simple. Income expenditure, a little bit more sophisticated, more in line potentially if you come from a bit more of a business background. It considers the period to which the actual transactions relate to rather than simply when they occurred. So once you get to that year end point, you're thinking about where do these payments lay? So for example, if you had goods or services provided in March, but you paid for them in April, you'd move that cost back to March to fall in the financial year to which they actually related to, even though they weren't paid for until the new financial year. So it's just understanding that difference in approach. The one that you need to use will be determined mainly by where you sort of sit with total income and expenditure, about receipts and payments. So councils less than £200,000 total, and by their income, you have to do both income and expenditure, can use receipts and payments accounting. Okay, and then councils who are over that £200,000 threshold need to use income and expenditure accounts, but that's only when that's been 3 consecutive years. So if you had a scenario where you went over in 1 year because you had a large grant or some seal money came in and it pushed your income up over the 200,000, that wouldn't mean you needed to move to I&E until that happened consecutively for 3 years. Having said all that, smaller councils can opt to use income and expenditure, and that can often happen if the clerk, the RFO, or some of the councillors have a particularly strong financial background, because it's quite different, as you probably imagine, anyone who's been in that scenario. The sort of commercial and business accounting to local council accounting is very different, and it can be quite something to understand to come into simply a receipts and payments scenario where it's literally just what happened regardless of when it relates to, with no sort of adjustments anywhere along the line. So that can be the case even if you are a smaller council. Having said all that, if you are a smaller council and you're using receipts and payments, if what you do is fairly sort of regular, consistent, standard, then that's absolutely fine. You don't need to sort of worry about the fact that you're using receipts and payments, and that's what's required for the AGAR. So that's absolutely fine. Okay. Do be aware though that if you do move between approaches, you do need to restate the prior year. So when you complete those accounting statements, so where you'll have your section in the AGAR of the current year and the prior year, both years need to be in the same format. So if you've got one in income expenditure, the previous year needs to as well. So do be aware of that. If you've been sort of on the edge of needing to move from one to the other, you do need to restate. Okay, and all this kind of year-end stuff, although we'll talk about it a bit more at the end, I have a whole session in that. I sort of in from January, we do run some sessions on that as well. Okay, so now we're kind of thinking about we've thought about the importance of all that financial information that we need and understanding in what way we need to keep it regarding sort of what receipts and payments and income expenditure. And now we can think about some good procedures to keep on top of it. So this is kind of maybe sort of a time element, and I appreciate that obviously some of it is simply because you haven't got enough time, but it's all about the cash book really. That's the key sort of starting point for your financial information, that record of your ins and your outs, your receipts, your payments, your income, your expenditure. If you've got all that in there, accurately recorded, then that is kind of the building blocks of all the reports and the information that you want to provide, the AGAR at the end of the year, the budget versus actuals, to help you set the precept. All those things come from that core information in terms of what's actually happening on a sort of day by day, week by week basis. Okay, so as it says there, it's the most important accounting record. So considerations then when you're collating your accounts in your cash book. So firstly, just to do it regularly. So if you can, just try and keep on top of it, do it regularly, put that information on a sort of weekly basis. Remember, you need to split out the VAT. We'll talk about that in a little while as well, just regards to if you want to claim it back or your returns, etc. You need to split that element out. And also make sure you've got a full audit trail. So the paperwork ties up with the information that you're putting into the cash book. You've got the invoice from your supplier showing the information that you're recording in that cash book. When you've got that information in there, regular bank recs is the best way then to help you confirm that that data is correct. So if it all tallies up and you've reconciled it correctly, then that's a fair indicator that most of the information in there is accurate. Okay, if you can do it regularly as well, if you do then come across a reconciliation error, you haven't got months and months to draw back through. You've only got sort of last month that you know, balance last month, you've got the current month that you need to go back to. And when you're thinking about your cash book, that might be at the moment sort of being sort of magnified by you trying to complete the accounting statements, it's useful to think, can I produce timely and useful information easily? So can I produce my budget versus actuals? Can I complete the AGAR? Is it taking you a really long time? And if it is, and you're feeling like that at the moment, then, you know, how can I improve on that? What could I do differently? So there's some sort of thoughts there at the bottom. Is your accounting system fit for purpose? You know, and we see so many people who come to us and say, well, I was new at my council, I turned up, they gave me a pile of paperwork, they gave me a laptop, and off I went. I'm teaching myself, I don't know really what I'm doing. So like it says there, do you need training on it? Have you got anything kind of to run by, or are you just trying to work out what happened before? Does it have all the information that you need to provide the information that your councillors want? And even things like, is it secure? So, you know, everyone access it. How do you share information? Is it backed up? What would happen if my laptop blew up? Is it all held on there and I'd be in a terrible situation if I didn't have that anymore? So these are the things to think about. So not only the core information that you're putting into the cash book, but then how it's then held securely, shared with the people, and how you get information back out of it. Okay, so there's just an extract of bank reconciliation from Scribe. So just to show that it's reconciling A equals B at the bottom, it checks out, it's as it should be. So these are the sorts of things that you'll be doing on a regular basis, just to make sure that everything's as it should be. What you're recording in the cash book matches up. Okay, so in terms of thinking about structuring the cash book, first thing I'd say there is to base it on your council budget or your precept breakdown. Now, that might sound fairly self-explanatory, obvious thing that if you've got your budget set and it's broken down into your budget codes, and each budget code or budget line has got an amount allocated to it, you would like to be able to report on this budget line has got this budget against it, and this is what we've spent so far. But actually, again, when people come and join us at Scribe, often we see nice budget list, but then they've got a cash book that bears no resemblance to it. So actually being able to say, what have I spent against this budget line, is not that simple, because it's not recorded separately in the cash book. So that should be the starting point. So even if you use a spreadsheet and you've got your column headings along the top for you, they should be your budget line, so you can put values into that and run something that says, look, this is where we are against the spend. Okay, so then you're going to allocate those payments and receipts out to those budget codes. And also think about grouping codes together that require reporting on. So if you run the village hall, for example, and someone's going to come and say to you, how much does it cost to run the village hall? You can run a report on that and say, these are all the elements we spend on utilities, cleaning, maintenance, whatever it may be. And this is the cost. And it's quite a simple thing to do if that's something you have committees or different areas that you'd like to provide information on. So then in terms of could it be improved upon? So this is thinking about additional codes to analyse the data further. So if you break it down a bit more, is that going to be more useful? For example, if you just have one code for admin, but that's everything from stationery, phone, training, all those things, subscriptions, whatever it may be, would it be useful to actually break that down further so I can see the individual spend against those different items? Or when it's set up, have I got every single sort of code I can possibly think of, every single budget line it could possibly be, broken down sort of far more than I need. Some of them I don't even allocate anything to in a year itself. So actually it could be then amalgamated to make it a bit more concise. So just think about actually how useful is it? And really at the moment, how easy or hard has it been to get the figures that I need, the accounting statements for the AGAR. And then make sure as well that you're recording enough information to make it easier to refer to. So that's things like, have you got the VAT number of your supplier? Have you got the invoice number from your supplier's invoice? So if you need to do your VAT claim, has it got the VAT number on it? If your supplier phones up and says, have you paid invoice number 22, you can look that up easily. Things like that. So you're not trawling back through paperwork, filing cabinets, and just trying to streamline that process. So that cash book really is sort of the core body of information. Okay, so there's just a summary from Scribe again, so just a couple of sort of budget lines in there so that you can see sort of that breakdown within an admin and some budgets, and then putting information in so you can instantly run something that says, look, this is the budget against these lines, this is what we've spent, and we can see where we are. So it just gives you a feel of what's going on, and if you can provide that information. So for example, the town hall wants to see how much it costs us to run the town hall, we can pull that information out. So it's just something, can you do things like that to provide that information at your meetings? Okay, just a summary then with regards to all that. So it's really about setting time aside regularly to keep it up to date and that you've got all the information in the cash book that you're going to need. Regular bank recs, because that makes sure your data is accurate, flags up errors if it doesn't reconcile. And then again, as a sort of side of that, we recognise that often all these things that you're doing are often done alone. Particularly if you're in a smaller council, it can be quite a lonely role. And sometimes if you're not sure about how to record something, in the cash book or something that happens sort of a bit outside the norm, who do I ask? Who do I check how to deal with this? And actually, sometimes it's nice to have that link up. So we have a couple of Facebook groups there that can be really invaluable for going and asking sort of questions about things if you need to as well. Okay. So moving on then to VAT. Can't have really a local council accounting session without talking about VAT, because again, that's kind of a big element. And again, it's something that people are worried about, which I would say is rightly so. There's a lot going on with that. And if you decide to try and find some information about that and put it in, VAT, HMRC, then you will be presented with a lot of information that you have to trawl through. There's a lot there to kind of work through. Okay, so as John said, we had a session a week or so ago specifically on that, so that went into a lot more detail, so it's worth watching that back if you haven't seen already and you do want to get a bit more information about that. But for me, for now, just to kind of give you some sort of pointers thinking about it generally. Two things I would say though. Firstly, is if you do have a complicated VAT position or things are changing at your council with regards to your VAT position, I'd always recommend that you take specialist advice. Okay, and that's best probably sourced from your local local association, just because they've got sort of specific council kind of VAT information for you. And some of the links with that as well is that be aware that kind of the VAT implications for local councils is different to businesses, so that can sometimes trip people up as well. So you've got some councillors to come along who are very experienced in running a business with VAT, etc., and VAT elements, but actually a lot of the VAT kind of rules and the way things are done with regards to a commercial business are not true for a local council. So I think if nothing else you take from this, actually it's different and you need to sort of just be aware of the way things are done differently. Okay, so firstly then, thinking about VAT registered councils. So if you're VAT registered, it will be because you have an additional regular source of income besides the precept. So most of the time in council, your main source of income will be the precept. And if you don't really provide any other goods or services, if you have the precept, you might have some sundry bits of income, bank interest, you might be reclaim the VAT, and that will be it. But if actually you do start providing other services, then there may be a consideration where you need to become VAT registered. Okay, so something like running a car park, but there's a VAT element to it. So as we said, though, the normal VAT rules for the businesses did not apply. So you may be aware of the £85,000 threshold for VAT registration. That is not relevant in this scenario of the town or parish council. It's when you would start to incur £1,000 worth of VAT. So if it's standard rated, when you start income of £5,000 of vatable income that would therefore generate £1,000 of VAT, HMRC would expect you to become VAT registered. Okay, and again, as I said, if you need to get into that and you're not sure about that, again, it's best to kind of get somebody to look at your scenario on a sort of case-by-case basis. But if you are VAT registered, you will need to submit VAT returns, and normally that's on a quarterly basis, but it could be on a monthly basis. If you are about to become VAT registered, excuse me, I'd recommend that you try and sort out your quarters to end sort of within a financial year itself, so your fourth quarter ends on the 31st of March, because it just keeps things a lot neater if your year end is the same as your quarter four end as well. We do have some councils where it straddles the year end, and it's just slightly messy for sort of checking and sort of a nice clean cut off at the end of the year. So if you're VAT registered, you'll have to use Making Tax Digital. So this initially was brought in a few years ago. Initially it was optional for local councils, but now it's mandatory as of last year. So you now need to use that. So you'll need software to submit it directly to HMRC. So there's a link from the software information to HMRC, and then that will put all that information through. And it's just meant to increase the accuracy, and all that information that's taken to HMRC is held within that software. Okay. Then so you may be not VAT registered. Okay, so as we said, if you just have your general income, your precept and other bits and bobs, and you don't provide any other specific services, then you won't be registered for VAT, but you can claim it back. So local town councils have a specific sort of ability to claim back VAT that they have incurred using Form 126. That's done directly via the HMRC website. You can do it by post if you've not done it before, but generally you should have a government gateway ID, and you can log on and submit the information that you'd like to claim back, so the VAT on the purchases that you've incurred. Okay, so it doesn't have any specific timing for claims, such as if you're VAT registered. If you're VAT registered, your returns will be governed by strict return dates and the time frame by which you have to have submitted it. But with VAT Form 126, you don't have to do that quite strictly. It must be for complete calendar months though, and if the claim is less than £100, so if you haven't spent a lot on VAT in the year, it must be a full year claim. Okay, having said all that though, I would try and get into a habit of trying to do it on a regular basis, just because it keeps things ordered and then they know where you are. So if you do it annually, 6 monthly, quarterly, if you can do that, then it just keeps things sort of running along nicely, so you know where you are. Having said all that, if you did have a really large purchase that had a lot of VAT on it, you could do sort of a one-off claim to get that back sooner. But generally, if it works, then I would do it on a sort of regular basis so that you know where you are. And again, that's thinking about continuity. So if you hand over to someone else, if it's very obvious that you did it on a quarterly basis, it's something that they then can continue. Okay. And equally, if you've come into a position where you've inherited a position where maybe it hadn't been claimed for a while, it may be worth going back and looking to see if you can do a claim, because you can go back to 4 years ago. But there's obviously a trade-off between how much work it involves for you to go back and collate that information versus what you might get back. So again, it may be worth a look, but depend again on sort of that cashbook information and how good it is. Okay, so that's just some considerations there regarding VAT. Quick extract there of just a short Form 126 record that you could get. So this is a Scribe version, for example, to show what you can claim back and collating that information. So making sure that you're splitting out that element so that you can easily see within that time period what you can claim for. Okay. So just as a quick summary on that then, so ensuring you're recording cashbook in the cashbook VAT separately, and making sure that when it's part of your audit trail, that those invoices you have from your supplier has their VAT number on it. You will need to put that VAT number information on your form, okay? And also that you're showing the amount or the rate of VAT that's being charged, okay, from them as well. So if it is a long or onerous process, if you've recently done a Form 126 claim and it really took a long time to collate all the information extracted from the cashbook, you have to go back to invoices to find the VAT number, then think about how can I improve that? You know, is it simply that I should record my VAT number against my supplier in the cashbook, and I can do things to make that a little bit easier. And as we said, specialist advice if it's, you know, you've got a specific VAT sort of situation, something's changing particularly within the council that may change this, such as, you know, massive refurb to a building, or you're going to build a new community centre or whatever it is, that has huge VAT implications. So things like that, think about, is there going to be an impact on whatever we're proposing we do? And do we need to think about, you know, the VAT and taking advice on that? Okay. And then finally then, because I said as we're sort of in May, end of May now, just some things to think about with regards to the year end and the AGAR, because I imagine a lot of you are probably still thinking about sort of going through that, and it may be worth just to think about those things as we talk about it at the end. Okay, so the AGAR itself then, so as we all know, for the financial year ending the 31st of March, the sections are, so you've got the internal audit report, which is your conclusions from your internal auditor. So if you will have that happening, although we're aware of, a lot of people seem to be struggling to find an internal auditor this year. And then you've got your section 1, the annual governance statement, so the confirmation of those internal controls. So all those things that we kind of talked about at the beginning, making sure that those procedures and the way things are done are being done, and that you can therefore say yes to those assertions. And then section 2, the accounting statements, the numbers bit. Okay, so at the start of the year, we do a whole long session all on the year end, but I've just picked up a bit about the numbers part of it now as you fill those boxes in, just some things to think about as we go through. Okay, so there is a little extract of that you need to fill in, and hopefully you've all seen that before, but if not, then this is this is what we talked about with regards to the current year and the prior year, and providing that information to your external auditor and filling those boxes in. And again, all that information is going to come from the Cashbook, and that's why it's so important to have all that good information in there. As we go back then, we've got to think about receipts and payments for income and expenditure, and making sure that we complete the accounting statements correctly according to that approach that we need to use. So for receipts and payments, the figures can come directly from the Cashbook. They're gross figures, VAT is included, no adjustments are made, it's just what happened, the total within that financial year in the relevant boxes. Okay. If you're an income and expenditure, then you've got a little bit more work to do. You need to exclude VAT, and that will constitute a debtor or a creditor. So either VAT owed to you, or you own VAT to HMRC if you're VAT registered, for example, potentially. And so that needs to be stripped out. And also adjustments. So as we mentioned before, thinking about what we owe at the end of the year. Should we have paid for these items? They related to March. They weren't paid for until April. I want to show them in last year because that's when they related to. So they're in income and expenditure. This is what you'll be doing. Same for debtors. So customers who owe you, you provided them goods or services. If they hadn't paid by the year end, then you'd make a debtor adjustment for that. So they're the main ones, debtors and creditors. There are others, prepayments, things that you've paid for before you've taken advantage of them. So they may need to move into the new financial year. Receipts in advance, money you've had in from your customers, but you haven't provided the goods or services yet. So you need to move that income. So when it relates to, so the new financial year, for example. So these are all the further considerations you need to make when working in income and expenditure. And what do I need to adjust for in order to get an appropriate reflection of the financial year itself? When you're doing that as well, you need to think about the materiality and regularity. So if you've got all these invoices you owe, you might want to set a limit. I'm not going to put an adjustment in for everything, and anything under £50, I'm not going to worry about, I bought a few stamps, I bought a few pens, things like that. And also the regularity. So if you do something every month, you don't need to adjust for it unless there's a huge fluctuation. If you pay your same grounds maintenance company £1,000 every month, even if it's in arrears, and it's £1,000 every month, then you don't need to adjust for it. It's just £1,000 a month. Okay. Obviously, when you're doing all these calculations, make sure that your adjustments from last year have reversed. Obviously, if you're working in software, that should automatically happen. But if it's in a spreadsheet, check again that your formulas are carrying through and the figures that you want are picking up in the right places. Okay. So then just thinking about the lines on the accounting statements itself, or the boxes, they used to be boxes and now called lines, so I kind of use that term interchangeably. So line 1, box 1, balance brought forward. Obviously make sure when you fill it in on the form for the auditor that what you filled in for last year's figures, your box 7 is your box 1. Okay, they will check that continuation has happened, that the closing balance has become the opening balance, unless of course you're restating. That's kind of just a sort of sense check there that it all tallies up. Line 2 is your precept, so just the precept, don't be caught out by any mention of rates or levies, and if you've received your precept along with something else from the district council, make sure you split that out, that you've got that line, and you might have tax support grants. Anything else that they've given you is not in the precept box lines. Other receipts, line 3, so that's everything else, all other income that you've had, but no bank transfers or movements of money. within the council, because that's just an internal reallocation of income. Okay, so it's just income that you've actually had in. And also be mindful if you've had refunds from your suppliers, for example, that should be reflected in line 6 payments. So it's a correction to an overpayment. Just because you've simply received it doesn't mean it's a receipt. So if you've overpaid your electricity company and they gave you £100 back, that should be deducted from your line 6, not shown as income. Okay, and again, that's excluded if we're an income expenditure. Line 4 is staff costs. So that's the core staff costs. So your salary, your pension, your NI, your tax, not things sort of roughly associated with staff like mileage or training, or if you have an external payroll company do it for you, not their costs. Okay, it's just the core salary costs. So make sure you're only throwing that element in line 4. All those other things I mentioned go into line 6, other payments. Line 5 is your loan interest, capital repayment. So obviously that's separate from anything else if you've got a loan. Okay, and then line 6, everything else, all other payments except for those staff costs, except for any loan repayments. And in the same way we talked about line 3, no internal transfers of money, so movements of money between bank accounts. Again, you're excluding VAT if you're an income expenditure. And again, be mindful of refunds. So if you've had a refund back from a supplier, it affects box 6. And equally, if you have made a payment to a customer, somebody's booked something with you, but then they didn't take the booking and you refunded them, although you've made a payment, it actually affects line 3, other receipts, because it's an adjustment to the income that you've had. Okay, so just make sure that you show those things in appropriate places. Okay, then that takes us on to line 7. So obviously make sure it adds up. That's key. Okay, so the total of the opening balance of box 1 plus precept and other receipts less your staff costs, your loan repayments, and your other payments is your line 7. Okay, your box 7 figure on there. If you are working in receipts and payments, it will be the same as your box 8 figure, which is your bank rec. So before you can do any of these calculations, you need to make sure that your cash book reconciles to the bank. So you've got a bank reconciliation that tallies up, that is going to become your box 8 figure. Okay, and if you're in receipts and payments, it's simply a case of recording the figures that relate to that in the relevant boxes, so that box 7 is equal to box 8. If you work in income expenditure, they will be different values, and that's due to any adjustments that you've put through. That's expected, and you'll need to explain that to the external auditor. Okay, so that's kind of your check at the end. If you're working in receipts and payments, everything that you put in, when you sum it to get to line 7, it should be equal to line 8. Okay. And then you've got line 9 is your fixed assets and any long-term investments. So obviously just making sure that you've updated for anything that's gone on. Make sure you're consistent in the way you report the total. So most of the time it's the original purchase value. So whatever you bought it for originally. If it was gifted, it's a proxy pound value in there as well. It's possible that you might have moved to the current value or different valuation, but you must be consistent. So if you change the way that you value your assets and you record it in line 9, you must restate to make sure they match up. But generally, it will simply be the original purchase value. No depreciation, and again, that's another sort of an external business, financial sort of accounting terminology that sometimes people expect, but no depreciation. It's just the cost that you bought it as, and if you get rid of it, if you sell it for a value, it just goes in as a receipt entry for what you sold it for. Okay. And then line 10 is your borrowing. So that's your loans. So the figure that you owe at the year end, normally that's PWLB. So just make sure that tallies up with the schedule that you've got for the 31st of March. Okay. And then the associated paperwork that you need to provide. So you'll obviously do your AGAR itself, sort of the core paperwork, but you'll need some additional information. So your bank rec, so that needs to match up to line 8, as we said. If you're an income expenditure, you'll have a reconciliation between line 7 and 8 to show why those two values are different, which will be your debtors, your creditors, any other adjustments. And you'll also need to explain your variances. So you'll need to compare the current year with last year, and any variances over 15% you need to explain. I'd also recommend that you check the specific requirements for your external auditors, because particularly if you were PKF originally and you've now moved over to a different one due to the restructuring of who goes where kind of thing there, because some of the requirements that they have with regards to variances is slightly different between different external auditors. Okay, you'll also need to provide an explanation if your line 7, so your total funds, the closing position, is more than twice line 2, which is your precept. So that basically means that you're holding more than double the precept in reserves. So providing you can explain that, so you can give a breakdown of the reserves, you may have a really large reserve because you're saving up, to refurbish a building, build it or something like that. That's absolutely fine. They just need to see that information. And when you do explain those variances, just make sure you give full numerical explanations. Just write, receipts have gone up because we hired up the hall a bit more. You need to back it up with specific numbers that break down the variance that you're explaining. Okay, otherwise you're going to get it back. So just making sure that you've got that information for them. Okay, and then that is everything. That's taken me through everything I wanted to say to you today. So I will stop sharing and I will pass back to John.
Awesome. Thank you very much, Hannah. We've been having some questions go through, so we're going to Q&A. And for those of you that want to know a bit about Scribe accounts and that makes it easier to do your accounts end to end, including year end and all your monthly work, will be one of my colleagues, Nathan, will give you a quick 5 to 7 minute demonstration after the Q&A, so you're welcome to hang around for that. But yeah, let's jump into the questions. So we had a question, Siobhan Burton. We had some questions from you. Feel free to unmute yourself and ask them.
My main question was if the PC is responsible for a village hall and you've got to make the charity, and it's a registered charity, but the PC is the sole trustee, I've got to make a return to the Charity Commission. And of course, it got money from the government during COVID. So does that count as income or not?
So you're going to, so the village hall is separate to the parish council for regards to reporting. So yeah, so if that, so that would be outside of anything in regards to the AGAR, do you mean?
Yes.
Yes. So my sort of specific knowledge on charities is not as good as my work, so I wouldn't want to give you anything particular with that. But just the main thing that we see that a bit sometimes as well is that sometimes people end up with the kind of charities or trust things within their parish council account. So the first thing there is just making sure that's a separate.
So I'd need to get separate advice about that.
You would, I'm afraid, I wouldn't want to give you anything particularly with regards to a charity.
Okay. Thanks very much.
Whether anyone here has, because we're welcome to sort of ask the way for there, but in terms of sort of the requirements of a charity, I wouldn't want to give you anything specific.
Okay, thanks very much.
Yeah, if anyone wants to chime in on that one on charities, feel free now. Otherwise, yeah, that's it. Siobhan, you suggested oh yeah, David, did you want to come in on charities, or no, you're on mute, no worries. Yeah, so you read, can a recommendation be made about terminology where I can find out about the specialist use of terms, as sometimes it's very confusing. Jessica has volunteered herself to write a blog on that with all the terms. So everybody on the Zoom, if there's particular terms you want us to include on that blog, or Jessica to include on it, just throw it into the comments right now. Yeah, Jessica will get on it and write this blog that Siobhan wants. No problem. So we had Janet Birkin saying, can you show us what a cash book should look like? I think you did that on one of the slides, didn't you?
That was more the reporting. So really the key thing here is what you put into the cash book. So there's going to be some key things. So the date, so when the transaction took place, who it related to, so customer, supplier, what it was for, so what did you buy, what did you provide, the values, so the net, the VAT, the gross, so you're breaking it down, and then the budget line it relates to. So that's the very core, really, everything. Additionally to that, you might want to think about the invoice number, the VAT number of your supplier as well, but at the very least, so that you've got that information so that you're then putting, as we talked about, the best way to structure a cash book, so you're allocating out to your budget line. If you did want to have a stay on and have a look at, like Nathan, think about how Scribe can do it, but at very least, if you've got it in a spreadsheet form, make sure you're recording all that information. But the key thing is to allocate it out to the budget line so that you can easily see actuals versus budgets on those elements.
Thank you. Claire, we've got two Jones coming up next, Claire and Carol, but Claire Jones, you had a question?
Yes, thank you, John. I think you've answered the supermarket one. I think if I go and try to go to customer services, hopefully they should be able to help me. The other one was the asset register. So under the actual purchase price of the asset, do I list that with the VAT on or take the VAT off?
No VAT, because it's assumed that you'll claim the VAT back.
No VAT, right? That's great. Thanks, Hannah.
Super.
Cool. Keep those terms coming in on the chat there, and we'll produce a blog. Any kind of terms or confusing terms that you hear of about accounts, drop them in there and we'll blog about them. Then it's Carol Jones, you had a question.
I've forgotten what it was.
Something about lectern.
Oh, that's right. Yes, it's on the assets register. A lectern was gifted to the parish council, and someone's at some time has worked out it cost about £500. So I don't think it's on. I'm not sure if it's on the insurance schedule, to be honest. But so that I assume has to be valued at £1. But members were talking about it on Monday night and said, "Oh well, we need to do something about it, because if it gets stolen or damaged, we'll want to replace it. So we need to get insurance cover on it." So I just wonder how that can be treated.
Yes. So there's kind of two elements here. One is the line 9 of the asset register we're thinking about for the AGAR. So in that respect, it's £1 because it was just gifted to you.
Okay.
But then you might, so that's your sort of core assets for that accounting record. But you may also want to have an insurance schedule or an asset register with regards to that, about replacing them, or the issue if something was stolen, what effect that would have, which would be a separate kind of element to that, because you're just the AGAR recording it just as their core cost, their original cost.
Okay. Thank you. Mandy Rickett, you had a question. Maybe she's left by now. We'll move on to Donna Tristram, and then after that, Mark Williams. So get yourself ready. So Donna Tristram, are you there?
Yes, hello. Hi.
Hiya.
Hello, hi. Yeah, there's two things I'm putting there actually. First one is about our AR. The figures have changed bizarrely. So would that be because we may have gone in and amended figures from the previous year?
Is that unscribed, you mean?
Yes.
Yes. So, yeah, if anything, so we basically, yes, if you've gone and changed something, then obviously it'll update accordingly. And if you've locked it down and then gone back and tried to do something, it could have changed it. So if you want to come through to us separately, and we can log in and have a look directly with you what's gone on in there. But once you finish, if you close it down and lock it down and copy it over, it should be okay. But if something's gone back and opened and changed it, then it will have updated.
So that is our problem. Yeah, that's what happened.
So it's not now. It's no longer showing what was actually submitted. So it's getting it back to what it was before.
That's right. It's not, obviously you have to carry forward last year's figures, and those figures now look different on the Scribe report that we print out, because obviously retrospectively we must have gone in and recategorized some things. There were some corrections that needed to be made. So I don't really know if it's a legal requirement to have to use the Scribe report, but then there's always going to be this balance of discrepancy of money. So I suppose we do need to trail it in some way.
Yeah, so depending on how much the problem is, we can't go back and fix it to get it to be what it was. If a lot of changed since then you could just set the figures in the next Scribe year and just start again and say, look, we know. That's
what I think we need to do, because we're talking about a very small amount of money, but obviously it just doesn't correspond.
Worry about it, set it as it is now and say, right, we're working from there onwards. But if you need any help with that, just contact us directly and we can do that.
Okay, I will do, yes. Okay. So who do I contact? Just go to John or?
Yeah, if you want to send it to hello@scribeaccounts.com.
Hello@Scribe, right? Okay, thank you. And then I did just ask if you were planning on providing an income and expenditure, because I do find the receipts and payments, it doesn't work well for a parish of our size. I do find it. I would much rather record things as and when invoices are received.
Okay.
Is that something that you are thinking about doing, or will it always?
Yes. So Scribe at the moment is a receipts and payments package, ultimately with the conversion to income expenditure. So it would have to be a completely separate package outside of that, and that's not something that we have sort of.
No,
So
it's
it's
not
not-
something
it's-
we
you're
have.
not working
We're
on-
working on a solution regarding monthly I&E, but yeah, we'll share more details about
Okay,
that. Yeah.
that's great. Thank you. Thanks.
Okay, so I'll ask one final question. What shall I do? Yeah, I'm going to go with Karen Frett. Are you there?
Yes, I am. Hi, sorry, I was
Hi.
just unmuting myself.
Okay.
Thank you. This has been really useful. Yeah, we just had a query in our council meeting this week, actually. So we need to consider our asset register. And if something's been professionally valued, does it still remain on the asset register as the originally purchased price? Or do we list it then as the new one for the AGAR?
Generally, it depends on the specific, because the JPAD practitioner's guide, which kind of goes alongside the AGAR, doesn't specifically give a way that you need to do this, but most of the time it's the original purchase value. If you wanted to move away from that and do sort of the current value or something like that, you'd have to make sure that you restated a previous year to use that. So it depends on what the approach that you take, but if you've always done the original purchase cost, unless you move away from that and restate last year as well, you would just continue with that. And like I think when we talked to Carol, you may want to have two elements. One is for the figure that you see on the AGAR, and then you might want to have another one that considers the actual true value and what the cost would therefore to be the maintenance, you know, when it needs to be replaced, etc., that isn't taken account in box 9 always.
Yeah, okay, thank you. I'll read the JPAD guide then. Just
Yeah, there's a bit in there, but it's not
Yeah.
always so helpful, but it's more the sort of decision is to be what figure do we want to use for box 9, but most of the time it is just the original purchase price.
right, okay, thank you, because our auditor questioned that. So
Yeah,
okay, thank you.
Thank you.
Awesome. Thank you very much. Thank you very much to Hannah. So that's kind of the end of the Q&A. You're going to go on, and anyone who wants to hang around now, we're going to show a quick, Nathan's going to give a very short demonstration of Scribe Account. You're welcome to see that. Hannah and Jess will hang around for that as well. Nathan's got to dip in and then he'll dip out again. But otherwise, yeah, thank you to Hannah. Everyone give Hannah a round of applause. Yes, I can hear all your caps all going around like that. Oh, nice. I like it. Yeah, hope you have a really good week. And also maybe some of you going on holiday next week. We've got the bank holiday, the school holidays. Have a really good week wherever you're going. Cool. Bye-bye. So I'm just going to hand over to Nathan now, who's going to give a quick overview of Scribe.
Thanks for that. And as mentioned, I won't take up too much of your time, but I just want to give a quick run through of our Scribe system for the benefit of any of you here today that aren't already users of Scribe. So I'll jump straight in and go ahead and share my screen here. There's just a couple of things that I would like to point out, first of all, about if you were to become a customer with Scribe, about the usage of the software and just being a customer in general. First and foremost, the website you see here is just our normal site, scribeaccounts.com. This is actually where you can come to sign in to Scribe. And that does mean, of course, that it's fully cloud-based. And in addition to that, you can have as many users as you need for the system. And those users can be set up with whatever permission levels that you wish to grant them, whether you want to give people a read-only access or just add transactions or other examples that can go beyond that. And then when it comes to your support while you're with us, your ongoing support while you're with us is always included. So there's a few different channels in which you can access that. Under the support drop down on our website, where you can access the help guides, essentially our manuals to our system, and Scribe Academy, where we host webinars on differing topics every week that you will always be free to join into. Then if I go ahead and sign into the software here, you'll see at the bottom right, I've got this button for support where I can type in my query, get responses on any of the articles in our knowledge base which may address it, but then hit the message us button if I then have a further query to that for any one-to-one support. So with those points out of the way, I just wanted to run through some of the main parts of our system that are worth being aware of, starting with the transaction section here at the top. This, of course, is where we can come to load on our payments and receipts. And if I click into payments here, you'll, of course, see all of the payments that I've already got loaded on. With the plus button at the top, I can load a new transaction where you can see that we can record information such as a minute reference to tie this to a particular meeting, or, of course, assign it to a supplier. When you use this drop down to assign it to suppliers who you already have in Scribe, you can add new ones directly from here as well. But we can then go to my CRM system, which I have at the bottom left of my screen, where I can come to all contacts and for an example, go to my own contact here and see all of the records that I've been assigned to throughout my use within the Scribe system. It's just an easy way to track activity of one particular contact. But I'll jump back to that new payment screen. The other parts on here worth mentioning is that with the payment details, splitting it down between the required cost centers and cost codes, we can break that down even further within a singular transaction if we need to, pointing it to different budgets within that single transaction. At the bottom, we also have drop downs where we can record any power or bylaws used for the spend of this transaction, which will then be recorded against it. And this checkbox for awaiting authorization as well, so that we can pull an authorization report towards the end. Coming back up to the top here, we can also record regular payments and receipts, just saving on this data entry that you've seen me run through here. But then if I jump into sales invoices in here as the final thing in the transactions section, this is where you'll be able to raise invoices within the Scribe system and actually be able to send them out as emails directly from here. And you'll be able to do that on bulk as well if you actually raise quite a lot of invoices at your council. Any invoices that you then have received payment for, you'll be able to come to the outstanding invoice and convert that over to a transaction automatically, so that will add that in and update the payment status. Purchase orders work in a very similar way, but of course adding in payments instead of your receipts. Now, these invoices, of course, we can raise manually in Scribe as just an accounts package user, but I will point out that we do have modules available for our cemetery, bookings, and allotments packages, which all the activity in those packages will raise those invoices for you over in accounts, again, just cutting down some of that admin where it's required. Then jumping into the budgeting section here, this of course is where you can manage all of your different budgets, set up your cost codes and set up all of their budgets month by month and their forecasts month by month. And then we have our budgeting report as the main report in here. This is going to break down our budgets and actuals for the current and previous financial year, along with a comparison into that next financial year if we've opened that year and set the budgets for it. We then also have reserves where you can, of course, manage your reserves, and this will break down your capital and earmarked reserves and then show you a summary of any spend and receipts that you have against those as well. Then moving into VAT, we'll see in here that I can generate my VAT form 126, enter the date range of the reclaim that I need to submit, which will default to the full financial year if you leave as is, and then we'll provide you with your 126 within Scribe. Now, there's only one main difference if you're actually VAT registered, and that is that Scribe will then link with the Making Tax Digital portal, then of course generating your VAT 100 instead and allowing you to submit that directly to HMRC from Scribe. So saving a lot of time, again, just on those little admin bits that you have to do without this. Now, there's many more reports available in Scribe. Of course, we can run through these in a lot more detail. I do encourage anyone who's interested to reach out and we can set up a one-to-one session where we can run through that in detail. But I'm now going to jump into the year-end section here, which I've currently got set up for receipts and payments. And in here, of course, firstly, for the section 2 of our AGAR, I can jump in here, hit view report, and this will be provided for me within the system. And then from here, off the back of the AGAR, for any variances we need to provide explanations for. Now I can jump into explanation of variances. In here, it will give me text boxes for any of my variances that I need to provide explanations for, where I can then go to explanation report at the top right, come to view report, and this will then allow me to, once those explanations have been entered in, have a fully populated variances report. We also, of course, have your asset register in Scribe as well. This can be imported from a spreadsheet, but this will summarize all of my assets, their acquisition date, purchase, current value, etc. We can also set their location using the What3Words website if we wish to, and that will give us this little link which we can click onto to then open up the location we've stored for that asset, and then generate our assets and investments report off the back of all of this data as well. Now, just as a quick final thing for any of you who are actually accounting in income and expenditure, we can switch this over in Scribe to then generate all of our year-end documents in income and expenditure. Now, one of the main things to be aware of is that day to day, Scribe will still work in a receipts and payments format. And when you jump into year-end and hit the calculate button, convert everything over into income and expenditure for you, and then allow you to generate your annual return, explanation of variances in all the same way, but in the correct format, along with recording all of your adjustments and summarizing that in your working document. So I hope that's given a bit of an idea as to what's available in Scribe. If anyone does want to look in more detail, I please do recommend just pop in your details in the chat so we can then set up a session with you on a one-to-one basis and make sure it'll meet your requirements at your council. But I won't take too much more of your time now. Enjoy the rest of your session, and thanks for allowing me to run through Scribe for you today. Thank you. Goodbye.
Awesome. Thank you very much, Nathan. Much appreciated. Yeah, so as Nathan said, if you want to have a dedicated session with Nathan, just drop a message there in the chat, and he can show you Scribe, understand your current problems, and see if we can help you, as well as giving you a price for it. Otherwise, again, thanks for hanging around.